So the cash and receiving part, there's just a few things like understanding like cash equivalents. For example, is like important. Um, like when you consider something to be something that should be count equivalent. For example, if it's under 3 months, I believe, is when. Other than that, like post-dated checks aren't going to be considered to be cash equivalents, and overdrafts are not considered either. Um, let's see. Um, Certificates of deposit are not considered as well, unless they're less than 3 months, because um, less than 3 months, okay, for 90 days. So that's a really important mark. Let's see. And then for like reporting this cash, um, restricted or not, the restricted cash is not, it's a current long-term asset that's going to be considered cash as well as overdrafts. It's going to be current liability. Um, Unless, like for example, the bank overdraft is in the same account, then it will be used to offset. If it's in the same bank account or in the same bank, then it can be used to offset the cash. Uh, if it's cash, cash equivalents are very different things. Cash equivalents are things that are equivalent to cash. That's a kind of a trick question. Um, in which account are postage checks received classified? Uh, like they're classified as receivables. Under which section is cash restricted for? So those are going to be non-current assets. Uh, if it's the overdraft from a different bank account, it's going to be reported as a liability. The same bank account is going to be netted against cash and the net cash reported. Restricted cash assigned for a specific purpose. So that's going to be like, you have to understand, you guys, if you guys are wondering about cash equivalents, how certain things, especially overdrafts, are classified. That's pretty much the gist of it. That's pretty important to know. Besides that, it's going to be how to do a journal entry for present value of notes, discounts on these. Um, let's see. Internal ratio. The turnover ratio and days to collect. Um, Net 110, net 30, 45. Um, let's see. And then most of it's going to be related to the allowance for doubtful accounts and bad debt expense, as well as how to write off these accounts or how to um, fix the collect after those have actually been collected to record the previous written off account. Um, Trade receivable is just another word for account receivable. That's pretty much it for cash and receivables. It's pretty straightforward stuff. But I will do a little more exercises on this. And then we're gonna pretty much be going into um, inventory. So inventory, there's like some stuff that's like pretty important to know. So we're gonna have to spend a little more time on inventory. But then that's pretty much the gist of it. Intermediate accounting 1. We're getting really close to getting ready for intermediate accounting 1. That's pretty much the gist of it. Intermediate accounting 1's not that hard. It's not like incredibly difficult. Really hard to understand. There's just a lot of material. Intermediate accounting 1 is really not that hard.